So today we got to talk about how Bitcoin billionaires are literally buying the dip for Bitcoin, like literally buying everything. So we're going to go over this and we're going to show you exactly what's going on here because there's a lot of money flowing into Bitcoin right now from billionaires, millionaires, all of the above. So we're going to go over that. Remember, I'm not a financial advisor. None of this is financial advice. Let's get straight to it. So first things first, if you haven't seen my video from earlier about Bitcoin, you got to check that out. Literally, it's exactly what you need to be looking at. I'll link it right up here to the top right of the screen. So definitely check that out. If you don't, you're doing yourself a huge disservice. All right. Anyways, let's go over what's going on with these whales. So first of all, you can see a lot of money still flowing into Bitcoin, $38 billion in the last 24 hours, $38 billion inside a 24-hour trading volume for Bitcoin. Lots of money flowing into Bitcoin. I mean, every single hour of the day, billions and billions and billions are flowing through Bitcoin. And a lot of that is because billionaires are literally buying and buying and buying and buying and buying. And they keep doing it over and over and over and over again, right? It's not stopping. It's constant. It's nonstop. Look, when Bitcoin was at $71,000, it only had like a $32 billion market cap, or not market cap, $32 billion 24-hour trading volume. You can even see over here $10 billion, $9 billion 24-hour trading volume on June 1st at $67,000, whereas now we're at $56,000 with a $38 billion 24-hour trading volume. So you can even see when we had that huge sell-off, we went all the way up to $120 billion 24-hour trading volume. And when we were pumping and we were at our highest, it was like a $9 billion trading volume. So that kind of shows you here, like the activity of the whales is huge right now. Because how do we have a whole time span from back here where we're only doing 9 billion in 24-hour trading volume at 60K, we're doing 21 billion, and then we're pumping, but it's only in the 20 billions, and it stays in the 20 billions until we get up to 73K. Then it's around 45, but then it's back to this whole 20 billion trading volume, 10 billion trading volume. And the reason why it's doing that, but not doing it at the current area we are, but still doing it at the current area we are, is because the whales, look, back then, the whales were not selling this whole area here from May all the way up until like July, or all the way up until about June. The whales were not selling. But then the whales slowly but surely got rid of their position around here coming into June. And they slowly but surely got rid of their position, dropped down to 54K. They started buying more and more and more. They made more profit. And then they sold a lot more and went down. Retail traders started selling as well. They pretty much manipulated the price and causing everyone to sell out. And then when everyone sold out, they started to hop back in. And then you see $100 billion in trading volume because they're putting all their money in after everyone has sold out. So they shook everyone out and then they started to buy back in almost immediately. So that's exactly what the Bitcoin whales here are doing. And I made a video about Bitcoin earlier doing a technical analysis, but this is more the fundamentals of what's going on here with the whales, right? That's what this video is about. But if you want to get a better technical analysis, then check out the link in the description for Chart Prime, best automated trading indicators in the game for TradingView. Definitely check that out. You can try it risk-free for 7 days. Use the discount code CP30 for 30% off. Go ahead and check it out. 7-day money back guaranteed. Best TradingView indicators out there. So I just had to put that out there, help support the channel and help support your wallet as well, and do this because you can make a lot trading. You can make a lot more than paying $67 a month. Well, with the 30% off, you get more off. Or if you get it yearly, you can get it even cheaper. But you can make a lot more money doing this as opposed to, just not using any indicators at all, right? You'll make all your money back and more. But let's go ahead and look at the whales because the whales are doing some humongous things here inside the crypto market. So this whale right here is a billionaire. This whale might not have a billion in crypto right now, but they are for sure a billionaire because people with $867 million don't put the whole thing in the crypto and just leave it there because you better believe they have billions in other places, right? All of the whales I'm about to show you today, all are billionaires not with a billion in crypto, but they have more than a billion in assets in cash and revenue, right? These are billionaires that we're talking about. So this billionaire here decided on the 4th of August, when everything was going bad for crypto, everything was going down for crypto. You can see on the 4th of August, as people were selling, it was going down and down and down. Before it could even reach the bottom, this whale said, all right, I'm about to hop in now because this is a good time to buy. This whale at $59,000 worth of Bitcoin. And this is the significance of dollar cost averaging. All right, at $59,000 worth of Bitcoin, they decided they would put $875 million into Bitcoin. $875 million into Bitcoin at $59,000 on the 4th of August. All right. And then on the same day, it dropped down to 58,000. They decided, since it's dropping more, we're going to dollar cost average. And they took $3.1 million and then purchased all the way up into 58 at $58,000 Bitcoin. So their money kept going down because the price kept going down. So at $54,000 the next day on the 5th, which is when Bitcoin pretty much bottomed out, but they got in at 54,000, they purchased a whole of $12.4 million worth of Bitcoin. And then again, you can see they purchased $19.5 million at 55,000 again. So they hopped in Bitcoin with $875 million. But after buying 3.1 million, 12.4 million, 19.5 million, they are still down to $867 million. The reason they're not selling and they're dollar cost averaging in, because they know the price is inevitably going to go up. Even if the price goes lower than what it is now, these whales know, these billionaires know that the price of Bitcoin will always bounce back, even if it goes to $38,000. That is the significance here. They know if it goes all the way back down to where it was once before, they will still have their capital and revenue to just go ahead and throw some money in at the bottom. So if it continues to go down, they know that they'll buy even more money. A billionaire is not going to take and throw $875 million. Really, they threw $900 plus million into this Bitcoin, but they're not going to throw $900 million plus dollars into an asset that they don't think is going to perform. This one did. They threw it into 900 million into an asset they know can perform. They know Bitcoin will perform. So this whale has a lot of Bitcoin. They have 15,443 Bitcoin. And I'm going to show you the significance here because in my other video, it's pretty much the $120,000 prediction. If you actually look at our Fibonacci retracement, the next level after this Fibonacci that we're in, the $73,000 Fibonacci that we're in, will actually go up to $120,000. So that's how I got that $120,000 prediction right there. But if we just do a little bit of math here, we can see why these billionaires are doing this. This is just Bitcoin, by the way. Remember, every single crypto in the market is following Bitcoin. All right. They're not always following 24/7 for move, but they're inevitably following the direction of Bitcoin, right? So 15,443 Bitcoin 0.4168432. That's how much Bitcoin that they have. If Bitcoin were to go to 120, not if, let's say when, because if is very pessimistic. We know it's going to 120,000. And hey, people love hearing pessimistic views, but optimistic views are way better in the long run because it really shows what you could achieve just by holding and just by staying strong in the market. But $120,000 Bitcoin times their 15.4K Bitcoin brings them to 1.8 billion dollars. They're already billionaires, so they're not even worried about this money. But look, 1,853,210,021.18. That's a lot of money. All right, so you got to think about this. They put in about 900 million. We can get the exact amount that they put in. Like, it's no big deal to get that exact amount that this whale just now put in, right? So they put this in, plus we're even going to do the $2.59 that they put in that you see right here in this area, $2.59, right? We're going to do that too, plus what they got right here. So we're going to take their 3 million and we're just looking for the total that this whale has spent. All right, plus $1.17, plus they have yeah, we're really doing it, right? Plus $1.13, right? Plus the other $1.13, and people will send random amounts of money to random wallets trying to get them to like trying to scam them or something. That's probably what's happening here. Someone's probably trying to get into their wallet and hack them or something. No big deal, right? But let's go ahead and do 12,420,174 and 86 cents plus 19548,814.27. So this whale put in $910 million. So $910,872,252.41. That's a lot of money. And they're down to 867,274,998.08. So 867 million is what they're down to after putting in 910 million. But they know that their money is eventually going to make them way more money in return. They already know that their money here will make them this amount right here once we hit that Fibonacci retracement. They already know in a short period of time they're going to be running this up to $1.8 billion. Like, this is a very significant trade right here. Like, this is the type of trade that a lot of people want to be making, but they just don't have the capital to make it, right? A lot of people, they're putting in 10,000 in Bitcoin because that's all they have, and then their 10,000 is going to, in this case, $19,000. Like, yeah, that's cool. $9,000, that's cool, right? But we want to see more than $9,000. And that's why getting into altcoins is so important for the people that don't have as much money. If you don't have as much money, you can get into like altcoins and stuff. Like you can easily get into altcoins and make more than a 2x. But Bitcoin is a safe investment, pretty much safer investment. Let's say that. And like I said, I'm not a financial advisor. None of this is financial advice. None of this is financial advice at all. Just got to protect myself here. But look, Bitcoin is a safer investment than these altcoins. That's why these billionaires are so comfortable with putting $900 million inside of it, because they know inside the future it could turn to $1.8 billion and will turn to $1.8 billion. But you can't really say the same for some of these altcoins. They're not looking at Floki right here and like, hey, let's go ahead and put $900 million in Floki when the market cap of Floki is only 1.1 billion. So that would just be stupid and asinine. Like, why would you put, like, why would you? Yeah, no one would do that, right? Because you also got to think about it. The price impact when you're buying into something like that, the price impact is going to be so impactful to the price where you're not going to get the best price. You're not going to get the most bang for your buck. So you might be putting in 900 million, but the second you buy, your 900 million might not be worth 900 million because the liquidity, there's not enough liquidity there. So I don't even think you would be able to make that transaction. But that's a whole nother thing for a whole nother time. I'd have to make a whole video explaining on how, liquidity and stuff like that works. But that doesn't even really matter right now. What really matters is the fact that Bitcoin is literally potentially life-changing for some people, but not so for others, for the people that are losing money and the people that don't have much money. That's why altcoins are so good for people to get into that don't have as much money. But let's say you do have a good amount of money. Like, you can turn safely $50,000 into $100,000. You can safely turn $100,000 into $200,000. You could safely turn $1 million to $2 million in way less than a year. You can safely do it inside of Bitcoin. Now, the safely, when I say safely, for people who believe in crypto, you can safely do it. If you don't believe in crypto, the second you see a drop from 54K down to 36K, you're selling. The second you've seen that drop from 70K all the way down to 49K, you sold. And that's why I'm saying this is only a safe investment for people who believe in crypto, for people who believe in Bitcoin, for people who will hold it because they believe in the asset. But like I said, none of this is financial advice. I'm not a financial advisor at all. But what I'm saying is I believe in Bitcoin. I believe in crypto. So I'm willing to put all of my money in it so I can watch it go up. And I'm willing to hold it. So if I had $1 million right now, I don't have $1 million right now, but I will in the near future. And actually, when I make it, I will make sure to tell you all when I make it. But yeah, look, I truly believe that right now is probably one of the best times to get in, because even if it goes down, you can still dollar cost average in on the way down. If you actually believe in it, this is a good price. This is a good price. This is a good price. And what is this? 50K. What is this? 45K. What is this? 36K. That's why, I'm just dollar cost averaging. Dollar cost averaging is the way to go when dealing with Bitcoin. That's the truth, honestly. But when we're looking at the daily chart is showing us exactly what is worth it and what is not worth it. So pretty much it's saying anything below $50,000 is a discount on Bitcoin. You're getting a discount. Now, anything below 60,000 is like average price or close to average price. If it's from 60,000 to about 54,000 all the way down to almost 50,000, like that's the average price that you should be buying Bitcoin at. But once you start seeing Bitcoin above 60, getting closer to 70, that's premium. You're a little bit above average when you go from 60K all the way up to 70. You're a little bit above average because with these automated trading indicators with Chart Prime, we have our premium price points, our equilibrium price points, and our discount price points. So our equilibrium price points pretty much shows us what is the average price you should be paying for Bitcoin, and what is a good price for Bitcoin, right? It's the equilibrium. It's the equal price. It's literally where it should be. The discount is what it says. It's the discount. You're getting it at a discount. It's cheap. Bitcoin is cheap when it's around 50,000 to 48,000 and anywhere below that. Premium, Bitcoin is at its most premium price point when it's 70K and up, right? Once you get closer, it's a little bit closer to premium, but once you actually hit 70K Bitcoin, now you're paying premium prices for Bitcoin. So right now, everyone that purchased up here, they got mad because when it went down, they lost a lot of money. So they sold. They sold once they lost that money. They lost a lot of money and they sold because they bought it at a premium price. But when you buy it for such a cheap price, even if it goes down to a lower price, then you're buying it again for a cheaper price. Even if it goes down to another lower price, you're buying it again for an even cheaper price. So it all depends on how long you really want to hold this. Now, that's one whale. We have another whale. Let's talk about how these whales are manipulating the price so then they can make a million, 53 million, 100 million like that, less than a day. These whales are doing that. This whale right here came in with a whole of $665 million. $665,038,656.66. This whale spent so much money here. Like, that's a lot of money. Like, that's absolutely crazy. They got in on the 5th of August at $53,987, right? And they spent $665 million, right? Well, when they sold it 2 days ago on the 7th, which is today, by the way, they sold at 8 a.m. today because they knew the price was going to go right back up. All it was a $3,000 difference in Bitcoin. And this whale went from $665 million all the way up to $701 million. This whale made a total of $36.7 million in 2 days. 2 days. So when I say that they're manipulating the prices, they are literally manipulating the prices to make millions. They're making you sell all the way up here or all the way down here because they know you bought up here. Since you bought all the way up here, and obviously if you're watching my video, you're not doing nothing like that, are you? Are you? Not really. Some people are buying at the top, but that's because you never know. So even if you bought at the top, don't feel bad. As long as you dollar cost average, you're going to be good. As long as you dollar cost average. But if you are the person that bought at the top and then watched it drop all the way down to the bottom and then sold at the bottom, they're the ones finessing you. Like, they're finessing you. Like, I'm just gonna be honest. You got finessed. You got finessed because that's what they're doing. They're really manipulating the prices and they're finessing the retail traders. So if you're one of those people that bought at the top and sold at the bottom, you're getting finessed. So don't do that ever again. Please don't do that ever again. I've done it, but actually everyone in crypto has done that before. Everyone in crypto has done it before. But the real question is, will you learn from your mistake? Will you learn from your mistake? I remember Shiba Inu and Doge. Like, I did good in Doge. I'm gonna be completely honest. The most money I've ever made was actually in the stock market. I've made a lot of money in the stock market. But when I first started doing crypto trading, like I did really good on Doge. I'm not gonna lie. Well, first things first, I bought Doge back in like 2017, but then I sold it once it popped. And like, well, it didn't really pump that much, but to me it was a nice pump. I sold it in like 2018, and then it started to come back. So I was like 2020 getting back into Doge, 2020, 2021, and I ended up buying a bunch and then selling it. And then I ended up getting back in again around like 6 cents, 6 to 5 cents in Doge. And I rode that all the way up until this point up here. I know I didn't sell at the peak. I did not sell at the peak. I sold at like 60 cents because I had a feeling Elon Musk was about to do something stupid on Saturday Night Live. I knew he was going to do something that just messed the price up. And I was watching the Saturday Night Live. I remember that. I was watching it because I had so much money inside of Doge because I ran it up from 6 cents all the way up, and it wasn't that long of a holding period, which was beautiful, like once in a lifetime type of thing. And I was watching it, and then the second he said Doge is a hustle, the second he said Doge is a hustle, I had my sell order waiting on Robinhood. I sold it. The second I sold it, everyone started selling, and then I had a little bit because I held a little bit. I sold some, but then I just didn't want to sell all. I tried to sell the rest of it, and then Robinhood crashed because too many sells on Dogecoin were coming. So that is the significance of getting in at the bottom and then getting out at the top. Like when you see things are topping out, get out, literally. Like you don't have to actually get out. Like you can sell some, realize some of your profits, but don't sell it all. Because what if you would have sold all of it here and it just kept running? Then you would be screwed. Well, you wouldn't be screwed, but you're missing out on a lot of money. So if you have like, let's say $50,000 in Bitcoin at this level, let's say you have $100,000 in Bitcoin at this level, right? And your original investment was like 50K, and you got in all the way like down here, well 70,000, so that would be 35,000. So you got in at like, let's say $35,000, right? And then you put 50K in at 35,000, and then it went to 70,000, right? And that's 100K now because you made a 50K gain. So what you would probably want to do is not sell that whole 100K, just sell the original investment or the profits, which would be 50K, and keep 50K. So then when it goes down, now you're down a little bit, like 40K. What, you're down like 45, 40K. Who cares? You're down to 45, 40K. Buy more. Put in what you just now made in profits once it bottoms out. Because then when you ride it back up to that same point in time, you're now at 120,000, 130,000, right? That's just, trading 101 right there. So that would have been a good move right there. But anyways, like I said, like whales like this, they're manipulating the price. This is $36 million inside of profit here. We got another whale over here. This one, they're still riding the wave, but they're down 24 million. So their money went into the other whale's pocket, right? But this whale, they got in at the peak. This is what I'm talking about. They got in close to the peak. They got in on the 30th of July when Bitcoin was worth $65,000, and they spent $417 million on this, right? And on the 3rd of August, their money just kept dropping, and they put in like 62 cents. Probably some scammer trying to scam them, sending them 62 cents. But what happened here, they're now down to $356 million, but they're not going to sell. This billionaire is not selling. They know Bitcoin's going to continue running. So even though they're down $61 million, they still got 356 million in there. The smart idea for this whale now would be to put in another 100 million or another 50 million, not 100, like 10 to 50 million, because if the price drops more, they could put another 10 to 50 million. The biggest thing in crypto you want to do is never put all your money in at once, because there's a high likelihood that it will drop. So if you have 100,000, put 10,000 in. Boom, price drops. All right, another 10,000. Boom, price drops, another 10,000. Boom, price drops, another 10. Boom, price drops, another 10,000. Do it like that. That'd be the easiest way to do it. Now we got this whale right here, $407 million bought at 66,000 on the 30th, just like the last whale. Yeah, they lost some money here, but they're dollar cost averaging, doing exactly what I just said. So now at 51,000 Bitcoin, $51,000 Bitcoin on the 5th of August, they put in $615,000, even though they're still down a bunch of money. They're down a lot of money. I'm just going to say that right now. This whale is down $61 million, just like the last whale. Now, this whale right here, they're down $88 million, but they're still going hard. And they're still going hard on Bitcoin. Look, they've been dollar cost averaging this whole entire time. You don't really see this often. Like, you don't see people who are able to withstand so many drops. Like, they started buying when Bitcoin was worth literally like $71,000. Like, that's kind of crazy. Like, Bitcoin was at its peak and they were buying it $73,000, and they just kept going. They just kept going and going and going. Even though it was at its peak, it started going down. They're still going. They're still dollar cost averaging. So total, this whale is down $96 million. So they're down a total, well, $95 million now. So they're down a total of $95 million. They're at $321 million. So we can do the math there. We don't even really have to put in the whole amount. Just 321 plus 95. So this whale put in $416 million. Now it's down to $321 million. They lost $95 million. But they didn't lose it because they didn't sell yet. That's the most important thing. As long as you don't sell, you don't lose. Okay. This whale, $303 million. Like, this is what I'm saying. These whales are buying the dip. Like, they bought on the 6th, which was yesterday, at $56,000 Bitcoin, $303,000. Right. This whale right here is only down $129,000. So they're doing the best out of all those whales. We got another whale right here. They're up $277 million. Let me say that again. This whale is up $277 million. Their balance is $291 million. So they did not put in a lot to start with. They initially invested $13.7 million into Bitcoin in 2017, when Bitcoin was worth $2,655, and they held it since 2017. That is absolutely crazy. Let's have a moment of silence for this whale. Just not because they're gone, but because the broke days are gone for them. Well, I mean, they were never broke. They had $13.7 million. They were never broke. But look, that's absolutely insane. $13 million right there. From $13 million to $291 million. $277 million worth of gains. This whale could have sold at the top, which at 73K, which probably would have been smart. But this isn't the average person we're looking at here. This is someone who just took $13.7 million and forgot about it. This isn't an average person right here. Like, they probably got hundreds of millions of dollars, and they're like, yeah, let's just play with this 13 million, see what it does. And what did it do? It went up. So, I mean, that's absolutely insane. Me personally, I would have sold it at 73K, but they probably have so much more money that it just doesn't matter to them. But anyways, that's all I really got for all that. Look, the whales are buying up Bitcoin like crazy. I mean, they're buying the dip. The billionaires are buying the dip. If you are not buying the dip inside of Bitcoin, you need to do it. If you're not buying the dip inside of other cryptos, altcoins, you need to do it. If you are buying at the top and you're selling at the bottom, you need to stop. So that's pretty much all I got to say with you guys there. All right. Remember, I'm not a financial advisor. None of this is financial advice. If you want these automated trading indicators, definitely check out the link in the description for Chart Prime. 7-day money back guaranteed. Use the discount code CP30 for 30% off. Try it risk-free. 7 days. Best indicators on the market. Discount prices, equilibrium prices, premium prices. You can know exactly when you should get in. And that's not the only thing that it has. Also has momentum wave bands to check out the momentum of whatever you're getting into with the Market Oracle Pro. Let's go ahead and bring that up. Show you guys exactly what that looks like here. Just loading a little bit for now. But this is huge. Has strong buying points, strong selling points. Tells you when it's a strong buy or a strong sell. So that is another thing. And then if we actually go over here, I'll show you guys how to use it a little bit, because these are the default settings. But if you come over here to the Market Oracle Pro, and then you add, and this is for Chart Prime automated trading indicators, link in the description, check that out. Then once you sign up for that with your email, sign up with it with the same email that you signed up for TradingView on. Let me say that again. Sign up for it with the same email that you signed up for TradingView on. because when you do that, it will come in here into your indicators, look up chart prime, and then it'll show all the ones you are invited to, which are the ones that you paid for, which are the locked ones here. They have the lock next to them. The Prime Screener comes with this, the Market Oracle Pro, the Market Dynamics Pro, and the Prime Oscillators Pro. The one I'm using for the premium and the premium, the equilibrium, and the discount prices is the Dynamics Pro, and the one I'm about to show you is the Oracle Pro. And then we also have the Prime Screener and screens different stuff like prices and volume and stuff coming in there. But let me show you this now. So the momentum wave bands with the Market Oracle Pro. These are the momentum wave bands. So it shows where the momentum is heading and where the price is heading. All right. And when you couple this with the other one, the Dynamics Pro, and you also use a Fibonacci retracement price, and then you also use these different trend lines and these different patterns and wedge patterns, like manually, like this is how you can become like god level trading at this point, right? You also have the Prime Trend Assist. I like the Trend Assist. It shows you like an RSI type of thing, but or like the moving average type of thing, and it does a really good job at it. And then we have the Prime Ranges, which I really don't use that much, but you can use the Prime Range if you want. It shows you good ranges where there's more volume coming in, but I don't really use that much. Too much stuff. If there's too much stuff on your screen, like you're gonna get confused. You don't want too much. All right, I just use a good 2-3 indicators and I'm good, right? But here's the momentum wave bands here, and I like the momentum wave bands because typically when you're in the red with the momentum wave bands, you're typically gonna get rejected and go down. The only time you go up in the red area is when the momentum wave bands are squeezing in, and when they get really tight like that and they're squeezing in, and then it starts to turn pink. That means you're about to have parabolic movement and you're about to have a huge bump. And it happens time and time again. You can even see the last time it started squeezing in, like right here, and it started turning pink, it started to pump. That's the significance of the momentum wave band. But then when they get real spread apart like that, that means it's about to go down. All right, it's about to go down. And we had so much pumps that it had to spread out. The momentum spread out. Now there's not as much momentum at the top, but now that shows that there's more momentum at the bottom because the green momentum wave band is pretty much where the momentum is built from. So when we go down to this green area, we might even go deeper into this momentum wave band to 45K. But that's where the momentum comes from. That's how we get the momentum inside of the market, because that's really where everyone wants to buy. That's the discount price. That's why when you've seen it go all the way down here and drop, the green momentum wave bands, they expanded, but then they closed right in. And when they closed in, they had that pump. So this one's expanding and it's going down, but then eventually it's going to close in on it, and then it's going to get tighter, and then it's going to go up. So that's really how the momentum wave bands work. So definitely check out the link in the description for Chart Prime. Best automated trading indicators in the world. I always use them, and you'll help support out the channel a lot if you sign up for it through the link in the description. Anyways, this is all I got for you all today. Remember, I'm not a financial advisor. None of this is financial advice. Hit the like button and subscribe, all that good stuff. And as always, I'll be back with another video.